Welcome back to the deep dive. Today, we're really getting practical. We're focusing on just one key source.
That's right. It's the examiner's report for the ACCA Strategic Business Reporting exam, SBR, from the December 2024 sitting.
And this isn't just a summary, is it? It's packed with insights into how candidates actually performed.
Exactly. It shows the strengths, but maybe more usefully for you listening, it really highlights the weaknesses, the common mistakes people made.
So our aim here is to unpack this report, pull out the really valuable bits, the practical advice. Think of it as a shortcut to understanding what the examiners are looking for.
Kind of a look behind the curtain, using the experience of past candidates to help you prepare.
Okay, so let's start with the big picture. What were the general takeaways from the examiner?
Well, first off, they really stressed using this report alongside the published sample exam. You can find that on the ACCA practice platform.
Right, you need to see the questions themselves, not just read about them.
Definitely. And another big point was about non-technical skills, specifically time management. This seems to trip up a lot of people.
Oh, yes. Running out of time. Classic exam problem. What was the advice there?
Stick rigidly to the time allocated based on the marks for each part. Don't get bogged down on a question just because you feel comfortable with the topic.
That's a tough discipline to maintain under pressure.
It is. They also suggested, thinking about the order you tackle questions, maybe start with one you feel more confident about.
Build some momentum. Makes sense.
Yeah, but they did caution about question one. Because it's often complex, integrating different areas, it can easily become a major time sink if you're not careful.
So be disciplined, especially on Q1.
Yeah.
And it's not just about knowing the standards, right? The way you answer matters.
Hugely. Well-constructed answers that actually answer the question are key. Rote learned stuff, just dumped onto the page without applying it to the scenario.
Yeah.
That scores poorly.
Application.
Pretty much. And get familiar with the exam format itself, especially that spreadsheet work in question one, where you're often correcting draft statements using different bits of information.
Okay, good overview. Let's dive into question one, then layout co. What were the specifics here?
Right. Q1, Part A, was about control, specifically over a company called Brassiot Co. Generally, this went okay.
People understood the IFRS 10 control principles.
Mostly, yes. The main pitfall was candidates going beyond what was asked. Like they'd start explaining associate accounting when the question was purely about assessing control.
Sticking to the requirement.
Exactly. The best answers linked the control principles directly to the facts given in the layout co-scenario.
Got it. What about Part B? Defined benefit plan, IAS 19 territory.
This was also answered reasonably well, particularly the calculations. The weakness was often the lack of explanation.
It's just numbers, no story.
Sort of. You need to explain each adjustment you make, why you're doing it. The better answers did this well. And using the spreadsheet properly to show the remeasurement loss was often good.
Any common calculation errors?
Yeah, things like using the wrong interest rate or reporting a settlement loss as a gain. Small details, but they matter.
Okay, now Part C, adjusting the consolidated statement of financial position. You mentioned this was tough.
It really was. The examiner noted it's a recurring challenge. It involves correcting the draft statement based on your answers to parts A and B. Using correcting columns in the spreadsheet helped.
What was the trickiest bit?
Definitely removing the subsidiary that they'd decided wasn't controlled anymore in Part A. This needed several steps. Goodwill impact, PPE fair value adjustments, dealing with post-acquisition profits, allocating to the NCI.
Wow, yeah, lots of interconnected bits.
Very easy to make a mistake somewhere along that chain. Interestingly, the adjustments for the pension plan from Part B were usually handled better within this Part C.
Okay, let's move on to question 2, Apaniwakama. Cash flows and ethics, right?
That's it. Part A, Consolidated Statement of Cash Flows. IAS 7. 2 main areas the examiner commented on. First, long-term borrowings. Most people correctly put new loans and lease repayments in financing activities. That was fine.
But
fewer remembered to specify that inflows and outflows should be shown separately. And, more critically, many missed explaining that non-cash transactions don't belong in the cash flow statement at all.
like what sort of things?
Things like loans you acquire when you buy a subsidiary, or the initial recognition of a right-of-use asset and lease liability under IFRS 16. They hit the balance sheet, but no cash moves initially.
That's a key distinction. What was the other cash flow point?
The high-interest bank account. This was generally answered better. Good candidates defined cash equivalents properly, short-term, highly liquid, the 3-month maturity thing.
And applied it.
Yes, they applied it to the scenario, concluded it was not a cash equivalent, and explained it should be in investing activities. Clear and logical.
Good. Then Part B, ethical issues, a standard SBR topic.
Yes, and generally okay if candidates were prepared. But the absolute critical thing here, again, was application. You can't just list ethical principles or threats.
You have to link them directly to the scenario.
Precisely. Explain how the situation in Apaniwa Co. creates, say, a self-interest threat and why that's an issue. Weaker answers just repeated facts from the exhibits without that link.
Or identified a threat but didn't explain the how or why.
Exactly. And sometimes the recommendations were a bit generic, not really tailored to the specific problem identified.
Right. On to question 3, Shilko. This one had a mix of standards.
It did. And some good news here, Part A on IFRS 15 revenue, specifically allocating the transaction price. This was apparently the best answered part of the whole exam.
Oh, really? That's encouraging. What did they do well?
They understood standalone selling prices and how to allocate the total price proportionately, and crucially, they applied it to the Shilko contract details.
And the weaker answers?
Fell back on just listing the generic 5 steps of IFRS 15 or got confused between things like markups and margins.
Application wins again. Okay, Part B, IFRS 5, discontinued operations.
Fairly well answered overall. The better answers outlined the IFRS 5 principles and applied them, correctly concluding the sale of a license in the scenario wasn't a discontinued operation.
Why not?
Because it didn't represent a separate major line of business or geographical area being disposed of. Some people confused it with just selling a non-current asset held for sale, which is different under IFRS 5.
Nuances are important. Part C, accounting for land.
Many did this well, talking through recognition and measurement chronologically. The key thing here was spotting the change of use.
From what to what?
From likely IAS 16 property, plant, and equipment to IAS 40 investment property. Strong answers saw that, handled the transfer correctly, and recognized fair value gains at the right times, both at the change date and at the year end.
And weaker answers.
Missed key dates or got bogged down in irrelevant details about IFRS 13 on how to measure fair value, rather than the IAS 16, IAS 40 interaction.
Okay, and the last part of Q3, Part D, option payment accounting. The report said this was answered badly.
Very poorly, yes. A real problem area. The fundamental issue was missing the scope exclusion in IFRS 9 financial instruments.
Scope exclusion.
Yeah. The contract was to buy a non-financial item for the company's own physical use.
And IFRS 9 doesn't apply then.
Exactly. IFRS 9 specifically scopes out these own use contracts for non-financial items intended for physical delivery. So trying to account for the option payment under IFRS 9 was the wrong starting point.
Ouch. So they applied a whole standard incorrectly from the get-go.
Pretty much. And then they made further errors, like thinking the non-monetary asset should be retranslated at year end. It just shows how vital reading the scenario for those crucial details is.
A tough lesson.
Right.
Last question. Question 4. Kimela Co. Sustainability focus here.
Yes, very topical. Part A, I asked about materiality and sustainability reporting. Answers were disappointing, according to the examiner.
What should they have discussed?
The concept of double materiality, which is key in standards like ESRS and influences the IFRS sustainability disclosure standards.
Double materiality.
Yeah, it means looking at materiality 2 ways. The company's impact on the world, people, environment, and the impact of sustainability issues on the company's finances. Impact and financial materiality.
Right, looking both inwards and outwards.
Exactly. Then Part A, 2, was about compliance with the IFRS sustainability disclosure standards. This was better attempted by some, but quite a few blank answers suggested lack of preparation.
And the strong answers.
They addressed each relevant paragraph from the scenario describing Kimela's reporting, discussed compliance or non-compliance point by point, and developed their arguments. Again, applied answers, not just quoting the standard.
Seeing a pattern here. Part B, impact of climate change on the financial statements.
This was generally well attempted. Good candidates saw it as 2 distinct points: financial assets and deferred tax.
What were the key points?
For financial assets at amortized cost, it was about increased credit loss risk due to climate factors, needing potential IFRS 9 impairment. Deferred tax implications were also generally handled well.
Weaker answers just talk broadly about climate change.
Yeah, sometimes discussing impacts not directly related to specific financial statement line items.
And finally, Part C, share-based payment, IFRS 2.
Fair attempts here. Most knew the basics. Fair value at grant date spread cost over the vesting period.
But there was a catch.
Yes, dealing with a non-market vesting condition that wasn't met. A lot of candidates struggled with this specific point.
What's the treatment if a non-market condition, like staying employed, isn't met?
You have to reverse any expense you've already recognized for that award. Because the condition wasn't met, ultimately no expense should be recognized. Many candidates missed this reversal.
Okay, so we've gone through all the questions. If we pull back and synthesize, what are the main recurring themes or lessons from this whole report?
Well, the big one, as we've said, is application. You have to apply the rules to the scenario, not just state them. We saw that everywhere: ethics, IFRS 15, IFRS 5, sustainability.
And precision matters, especially with calculations like the subsidiary removal or identifying non-cash items for the cash flow.
Absolutely. Attention to detail is crucial. Also, reading the question and scenario incredibly carefully. Remember Q1A going too broad? Or Q30 missing the own use point?
Yeah, those were costly mistakes stemming from not reading closely enough.
Definitely. And finally, you need to be prepared for some specific, maybe trickier areas, like that IFRS 9 scope issue, or double materiality, or the share-based payment condition.
So all that advice at the start about time management, question order, practicing on the platform, it all links back directly to the problems people actually face.
Exactly. Practicing on the platform isn't just about knowing the content. It's about getting used to applying it under exam conditions, using the tools, managing your time. It builds those technical and non-technical skills together.
This has been really illuminating. Going through the examiner's report like this gives such a clear view of the common hurdles and, I suppose, how to avoid them.
Hopefully, it equips you listening with some practical insights for your own SBR journey.
Absolutely. And it leaves me thinking, if understanding why candidates struggled on specific points is so critical for doing well yourself, what does that really tell us about the nature of genuine understanding versus just surface-level memorization when tackling complex subjects like SBR?
That's a great question to ponder as you develop your own learning strategy. True understanding goes beyond just knowing the rules.